Last week, tech stocks faced a sharp pullback, with the Nasdaq dropping over 3.8% and the S&P 500 tech sector down 4.2%, marking the worst week since the last April tariff sell-off. Oracle was not spared too. Its share prices dropped nearly 2% on Friday, closing at $239 as part of the broader tech retreat. But beneath the volatility lies a powerful growth story. Today, we'll explore why Oracle's AI and cloud strategy could make it one of the most compelling long-term plays in the enterprise infrastructure sector. Oracle's AI pivot. Oracle is undergoing its most aggressive expansion since the early 2000s, driven by explosive demand for Oracle Cloud infrastructure and a recent $300 billion partnership with OpenAI. This deal alone pushed Oracle's remaining performance obligations up to 400 times year over year to $455 billion, with $317 billion directly tied to the OpenAI. Through the Azure-OCI interconnect, OpenAI now can run Oracle GPU clusters inside Microsoft's cloud, enabling ultra-low latency AI training. This collaboration positions Oracle as a backbone for global AI workloads, creating a recurring revenue pipeline unmatched in its history. Let's look at the financial performance of Oracle. In fiscal year 2025, Oracle reported $15 billion in revenue. It was up 12% year over year. Operating income rose 18% to $6.3 billion, and EPS reached $1.47. The standout was cloud infrastructure, which surged nearly 50%, prompting Oracle to forecast 77% OCI growth in financial year 2026. This was the highest ever forecasted. OCI now accounts for 18% of the total revenue, up from just 6% in 2021. Meanwhile, the legacy database services have declined to 34%, which is a concern. However, it is showing how deeply Oracle has pivoted towards looking at infrastructure build-out. To meet demand, Oracle is building massive AI data centers in Texas and Wisconsin in America. It raised $18 billion in bonds, and it's negotiating another $38 billion debt package. In financial year 2026, CapEx is projected at $35 billion, a 91% increase as part of the strategic project co-developed with OpenAI and with other hyperscalers. Its CEO, Safra Katz, calls these facilities the indispensable compute layer for global AI, anchoring Oracle's infrastructure dominance. Unlike previous eras dominated by single vendor lock-ins, Oracle's new multi-cloud strategy has become a strategic differentiator. The company now delivers its autonomous database and Exadata cloud services natively inside Microsoft Azure, Amazon AWS, and Google Cloud. This cross-cloud deployment gives enterprises the flexibility to use Oracle's database stack without migrating workloads entirely off competing clouds. As of Q1 FY 2026, Oracle reported 23 active multi-cloud database regions, with 47 more under construction, representing 204% growth year over year. Multi-cloud database revenue has reached an annualized run rate of $2.6 billion, accounting for roughly 21% of the total OCI sales. Beyond infrastructure, it is important to see Oracle's application cloud division, which includes Fusion ERP, NetSuite, HCM, and CRM, that has delivered steady growth. In financial year 2025, applications revenue rose 6.7%, while SaaS sub-revenue jumped nearly 11%. Let's look at the balance sheet of Oracle. Financially, Oracle holds nearly $11 billion in cash. However, $91 billion are in total debt, which is concerning for some investors. Free cash flow turned negative due to heavy CapEx, but operating cash flow rose 13% to $21.5 billion. Buybacks are paused in the meantime, but the company maintains a 0.80% dividend yield. Let's look at market position and valuation of Oracle. Oracle's cloud market share has grown from 1% in 2020 to 2.7% in 2025, with projections to hit nearly 4% by 2028. OCI's pricing is 43% below the market average, and Oracle plans to launch 70 public cloud regions as well, and that will boost enterprise adoption. Despite a forward PE of 57.9 times, higher than Amazon and Google, analysts see very good upside from here. DCF model suggesting a fair value of Oracle's stock price at $327 per share, implying a 30% growth from current levels. Oracle's AI-driven expansion brings short-term risks, including rising interest expenses and reliance on OpenAI. But its multi-cloud strategy, deep integration, and massive backlog make it one of the most compelling infrastructure plays in tech sector. My verdict, I would rate this company as a buy. Oracle is no longer just a database company now. It is becoming a compute backbone of global AI. What do you think? Is Oracle's $300 billion AI bet worth the premium? Drop your thoughts in the comments below and let me know if you are holding Oracle share or watching from the sidelines. Thanks for turning into Dividend Diaries. See you in the next one. Thanks a lot.